Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on commodities. We're going to start with the dollar, and we're going to look at everything on the weekly time frame and then zoom in a little bit. So the dollar on the weekly has not lost the uptrend since we started bouncing back in February of 2018. So earlier this year, and we can see that we clearly have a higher low pattern. So the most recent higher low that has formed, I would consider right here at 94.08. Anything on the weekly above 94.08 continues this higher low pattern, and we just got our breakout. We had resistance in the mid 95s. We rejected 3 times, and now clear follow through. RSI on the weekly is getting a little extended. We have not seen this RSI breach 70 since back after the massive bull run in 2015 that put us up over 100. So you can see we did reject this weekly RSI back at our high point over the last few months, actually the last few years. That high point of the RSI, it topped out right at about 69.70, and here we are currently at about 69.70. So watching very closely for this, because if we do top out, it's going to be a great oversold bounce opportunity in gold, but we are currently counter trend if we're looking in that direction. So we have to be cautious of that. The daily chart with significant follow through for the dollar, and the RSI on the daily, again, same thing. Up near 70, we have rejected from 70 recently, but we've also gotten over 70 recently, so that's not as clear of a level as the weekly chart currently is. So what stood out to me on Friday is the fact that the dollar got a huge bull break, breaking key resistance and finally getting follow through, and it actually ended up being a nice little cup and handle pattern with our left side of resistance at 95.65. Here's our consolidation, the right side, a lower high, unable to break resistance, healthy consolidation in a handle, and then there's your breakout. But what stood out Friday is the fact that gold, although the gold bulls didn't do anything on Friday, they held support. So the fact that the dollar saw so much strength and gold was able to maintain support, that was a bit of bullish divergence for gold for me, the fact that it was able to hold up that well. So that tells me that the correlation will likely benefit gold in terms of seeing some follow through once the dollar does begin to consolidate. So we have a base of support down at about 1204, 1205, and also a very clear wall of resistance at 1216. If you put a resistance line on 1216, look at how the 4-hour time frame has reacted to this price level all last week. I'm looking at 5, 6, 7, 8, 9, 10, 11 rejections without the ability to hold gains over that level. So until we can turn 1216 into support, this bounce isn't going anywhere, but we are certainly due for it with the weekly RSI oversold. We have currently seen 5 red weeks in a row. We have a weekly inside bar to be watching this coming week, and the daily time frame. Again, these exponential resistances, this is the 12-period exponential on the daily. It's rejected the price a dozen times over the past month and a half. So that's a really good moving average to be using as well, and we have to see 1216 become support for a bounce to get underway. GDX has a notable bear break of its monthly equilibrium pattern. We've been watching this pattern for a couple months at this point. Higher lows, lower highs, tightening range for a significant amount of time, and a very clear bear break this month. So the next support is all the way down at 1858 on the monthly, and there's a couple ways to play this bear break. Number one would be waiting for gold to cool off on the weekly time frame and bounce and give us a lower high. So when the bounce finally does get going on gold, we're going to look for a lower high to form. It depends on how much volume's behind the move, but a lower high perhaps around the 1230s, 1240s. And actually, let's say the 1230s to 1250s is where we're going to be looking for a weekly lower high to be set. And after this bounce to cool off the RSI from oversold on gold, bears could be looking to make a bearish entry on GDX by either shorting NUGT or by going long on DUST. That's one scenario, or we could be waiting for GDXJ, which is still in its equilibrium. It would have to see a break of 29.88 and 29.84 for a clear bear break, and we still have a good amount of space above that level, all things considered. So if we see gold start this oversold bounce next week, we're going to be looking for GDXJ to remain in this pattern, and that is going to continue to play out. So we could be waiting for GDXJ, and why I'm choosing that path is because we already saw a bear break of GDX. So right here on the monthly time frame, GDX dropped down to 2084, which was the lowest price that we had seen at that point for 2, 4, 6, 8, 10, over a year, the lowest price. But we got no follow through. So we've already seen a bear break fake out. And at that point in time, we did not see a bear break on GDXJ. So GDXJ is respecting the monthly equilibrium better than GDX is, which is why I'm keeping an eye on it. Oil on the weekly time frame could be setting up for a potential bearish reversal head and shoulders pattern. So that's something I'm keeping an eye on with the left shoulder, the head. If we bounce from here, we'll be watching for the potential of a right shoulder, and anything right now above this weekly support of 63.62 will maintain higher lows, and we're going to look for a weekly higher low to form. And again, if we bounce and set a lower high and then break wherever this higher low attempts to form, that will be a bearish reversal head and shoulders pattern. So that's looking a little bit further ahead. That right shoulder hasn't even started developing yet, so definitely premature in terms of acting on that pattern, but it's just what visually stands out to me and something I'm going to be keeping a close watch on because we have been bullish on oil. Let's look at the monthly time frame for oil. But we've been bullish for a significant amount of time. We're pretty much the run from back in June 2017, so a 14-month bull run, and watching for the potential that this monthly chart is going to have to pull back a bit more significantly to form another higher low as the last clear consolidation levels, 63.62 and 58.11. So that's what I'm keeping an eye on for oil. More of a longer-term setup I'm watching. Natural gas had a nice play this past week. I'll look at on the shorter-term time frames in just a second, but as far as the weekly chart goes, it is all about 3018 resistance. Anything under that is a weekly lower high. We're looking for a pullback from this level with a lower high to be set and then an equilibrium on the weekly. So we have huge volatility, 3018 all the way down to 2671. Now we're looking for a lower high, and then we'll pull back and look for a higher low and for a tightening weekly range, which forms equilibriums all the time. We just watched a giant equilibrium form over the course of essentially half of a year plus. So keeping an eye out for the same thing. And the daily time frame, trying for a little bull flag to see another leg up, and we'll see if the bears jump on natural gas once we do get up towards that 3 psychological level, as we are anticipating they will. So a play that we had this coming week, or this previous week, was the 4-hour time frame extremely extended as we headed into the inventory report on Thursday morning. So the RSI here was up at 80 on the 4-hour time frame. And if you scroll back historically, we can say, all right, when's the last time the RSI was this high? And for this specific futures contract, NGU 2018, the answer is that was the highest the 4-hour RSI has ever been, really. And it's hit 80 a couple times. We did have one spike back here, back when it wasn't even really trading. But the bottom line is we're not going to keep the RSI above 80 on the 4-hour time frame very long. So my setup for Thursday morning, seeing that high RSI, was saying, all right, with this inventory report, I personally don't like being in positions during the inventory report. It's too much gambling for me. So I wait for the initial reaction to the inventory report. And I said, if we get a bullish reaction initially, that's going to put us to very extreme RSI levels on the 4-hour time frame. The daily chart is very extended at this point. At that point in time, we had 6 big green days in a row. So we said, all right, initial bullish reaction to the inventory report. Let's look for an entry into DGAS. So DGAS that morning, it played out perfectly. At 10:30 a.m., we saw a big spike down when natural gas had an initial bullish response, and then we saw a huge spike up the 10 minutes later. So we had a lot of us making entries in the 2070s. I got stopped out and I had to make a re-entry in the 2090s. Still got a profit. Not as significant as some of the other members, but bottom line is we were ready for this dip. We were all buying this dip. And then 10 minutes later, very significant follow through for a quick sell. And then we ended up having a nice bottom fishing play, headed back down towards that support of 2067, and we held it by 3 pennies and then saw a continuation of that pullback. So that was just a little bit of insight in terms of how we make plays and what we base it based off of on the shorter term time frames. And from here on natural gas, again, we are looking for a more significant pullback, and a loss of the 4-hour higher low pattern will be an indication that the daily chart has set its lower high and is looking to consolidate back into this weekly equilibrium. So keeping an eye out for bearish entries on natural gas, and we'll see how the coming week goes. Have a good rest of your weekend.